Hi students, today we are discussing another problem from dissolution of a partnership firm. Last class also we have discussed a problem from dissolution of a partnership firm. Here also we are discussing another problem. The speciality of this problem is that here in this problem we will discuss how to treat the investment fluctuation fund and how to treat the expenses paid by partner. That means realization expense is paid by a partner. These two adjustments are the speciality of this problem. Here is the question. These Dia and Ria were partners sharing profits and losses equally. Their balance sheet as on 31st March 2015 is given here. In the liability side we have investment fluctuation fund and the asset side we have investment also. And apart from that their loan accounts also given. A partner, that is Ria, is taken loan from business is taken loan from Ria and loan is given to Dia. Two cases are there. From Ria we have taken loan and to Dia firm has given loan. So from one partner loan is taken and to the another partner loan is given. So these two situations are there that also we will discuss in this problem. So on the above date, that is 31st March 2015, the firm was dissolved and the liabilities and assets realized as given here. The creditors were paid off by giving them a plant and machinery at a discount of 10%. Plant and machinery we have 39,000, that is paid at a discount of 10%. That means 3,900 we have to deduct from 39,000. That means 35,100. So for that amount is given to creditors and the given remaining amount will be paid in cash. Because creditors we have 60,000. So whatever is the amount of plant and machinery, remaining will be paid in cash. Then Ria's loan was paid with an interest. We have taken loan from Ria, that is paid with an interest of 500 rupees. Debtors realized 10% less of their amount due from them. So debtors we had 42,000 and we know that while transferring that to realization account, debtors the gross amount will be shown as asset, that is 42,000, and the provision for doubtful debts will be shown on the credit side of the realization account as liability. That and all we have discussed in the last class. Now that credit debtors realized at 10% less. That means 42,000 minus 4,200. That is the realized amount of debtors. Then stock was taken over by Ria. Asset is taken over by a partner. That also we will discuss here. That last problem also it was there. Then investment realized 80% of their book value. So that we will discuss. Along with that we have to explain the investment fluctuation fund also. Then realization expense 600 was paid by Ria. That also is there, amount paid by partner. What we have to do here, we have to prepare realization account, Ria's loan account, then Dia's loan account, then capital account of partners and cash account. Let us see how to prepare the realization account first. Here is the realization account. We have kept it ready, realization account. First of all, what we have to do is we have to transfer all the assets one by one. Debtors we have 12,000. Debtors we have 42,000 and stock we have 12,000. Okay, then investment is there, that we have 18,000. So plant and machinery is there, plant and machinery we have 39,000, that also transferred. So these are the assets to be transferred. Cash we know that it will not be transferred, it will be taken to the cash account because cash need not be realized again, it is in the form of cash only. So no need to transfer that to realization account. Now let us transfer all the liabilities. Liabilities we have outside liability only one, that is creditor. Creditors we have 60,000, that is transferred. And now we have to transfer the provision for doubtful debts. That provision for doubtful debts also transferred. And here is the next item, next element here, investment fluctuation fund. See, a most important thing is that if investment fluctuation fund is there in the liability side and investment is also there in the asset side, then we have to transfer investment fluctuation fund to the realization account on the credit side. Okay, if investment and investment fluctuation fund both are there in the balance sheet, we have to transfer the investment fluctuation fund to the credit side of the realization account. And in the question balance sheet, if investment fluctuation fund only is there and not investment, no investment is there in the balance sheet, only investment fluctuation fund is there. In that case, we have to transfer investment fluctuation fund to the capital account of partners. That means it will be shared among the partners and shown in the capital account. Okay. So if both investment and investment fluctuations are there in the balance sheet, we have to transfer investment fluctuation fund to the realization account. And if there is only investment fluctuation fund in the balance sheet, that is to be transferred to the capital account of partners in their old ratio. Here, since we have investment fluctuation fund and investment, we can transfer investment fluctuation fund to the realization account credit side. Investment fluctuation fund we have 2,000 and the provision for doubtful debts we have 6,000. Okay. Now all the assets are transferred and liabilities are transferred. Now comes the realization part. Assets realized, for that we will write by cash. Which are the assets realized? Debtors realized 37,800 because it is realized at 10% less than the book value. Then next, investment. We have investment realized at 80%, means less 20%. So investment, these are the two assets realized. Then plant and machinery is taken over by creditor, so no need of taking that amount here. Okay, so total realized value is 52,000. Then stock is taken over by RIA. So what we can write by RIA's capital. How much? It is taken over at 7,000 rupees. Okay. Then once again we will tell the adjustment regarding plant and machinery. Plant and machinery is taken over by creditor. Okay. So plant and machinery, since it is taken over by the creditor, plant and machinery is cancelled and creditors up to that much amount both are cancelled. So no need to write plant and machinery entry for plant and machinery and creditors up to that much amount. So creditors we had 60,000 and plant and machinery is given them for 24,900. Okay, plant and machinery we had 39,000 and it is realized at 10% less. That means 35,100 we have paid it to creditors. Okay, out of the 60,000 we have paid to creditors 35,100. Remaining is 24,900. That only we will write as cash. Balance is paid in cash, so that 24,900 we will write here. Okay. That means 60,000 minus 35,100. That is regarding creditors. Then another one item is there, adjustment is there. We have to pay interest on loan. RIA's loan was paid with an interest of 500. So that amount, that liability is to be written. Here we need not write cash because that adjustment will be made in the loan account of the partner. So since it is an expense, we can show that here interest on Ria's loan. Interest on Ria's loan, how much? 500. Okay, this will be transferred to Ria's loan account. Then now expense, regarding expense. Here expense is paid by Dia. Expense is paid by Dia. That means partner pays the realization expense. So before writing the journal entry here, we can see what are the different situations regarding the payment of expense on realization. Different methods or journal entries for payment of realization expense. So here first case, when the realization expense is paid by the firm, firms directly pay the realization expense. This situation we have explained in the last problem. When firm itself pays the realization expense, we know that realization account debtor to cash or bank. Okay, realization account debtor to cash or bank. Clear? Then next, when the expense of realization is paid by a partner on behalf of the firm. Firm had to pay the realization expense, but now who paid? Partner paid. That is the situation here. When the expense of realization are paid by the partner on behalf of the firm. So that is actually the situation here. Dia paid the realization expense on behalf of the firm. So what can be the journal entry here? Realization account debtor to that partner's capital. Okay, realization account debtor to partner's capital. So we can write that journal entry here because Dia paid realization expense for firm. So what we can write here? To Dia's capital account. How much she paid? 600 rupees she paid. Then let us see what are the other cases of payment of realization. Next we are going to see that a partner is appointed to do the realization work. A partner is appointed to do the realization work, and for him for doing the realization work, he will be given some remuneration. So that is the case here. When a partner is appointed to do the realization work for a remuneration, suppose here Dia is appointed to do the realization work, and for her 5,000 will be given as commission. Then what can be the journal entry? Same journal entry what we have written above, the same way we will write here realization account debtor to partner's capital, because firm has to pay remuneration to partner. Okay. Now next case, when realization expense is paid, is borne by the partner and the expense is paid by the firm. And the expense is paid by the firm. Expense is paid by the firm. When the realization expenses are borne by the partner, that means partner has to meet the expense, but here instead of partner, firm paid. So now who has to pay to whom? Partner had to pay the realization expense. For example, partner is appointed to do the realization work and he will be given commission, and he had to pay the realization expense, but on behalf of him, firm paid. That means partner has to pay money to firm. Partner has to pay money to firm. That means partner's capital account debtor to cash or bank. Okay. The next case, when a partner is appointed to do the realization work for a remuneration and that expense is met by that partner. Okay. Partner is appointed to do the realization work and the expense are met by him. For example, Dia is appointed to do the realization work for a remuneration of 2,000 rupees. But actually she had incurred an expense of 1500 only. She paid expense from her pocket. She has paid 1500 rupees as realization expense. In that case, what is the journal entry? Actually, that expense is paid by that partner out of his pocket. So that is not related to business. So whatever is his personal expense he met. So there is no need of passing a journal entry. Okay. So these are the different cases on payment of realization expenses. Okay. You have to go through all these journal entries once again and make it clear. Then we can come back to realization account. So all the journal entries are over. Now let us see which side is having more amount. I think debit side of the realization is having more amount. We can total there, and that total can be taken to the credit side. The balance now here 9,800. In the question it is given that they are equal partners. So the profit or loss will be shared equally. So capital account, we will write capital account debtor to realization account, that is the journal entry for Ria and Dia 4,900 each. Okay. So this is the regarding payment, that realization loss, sharing of realization loss. Now let us see the preparation of loan account. After that we can come back to capital accounts. First Ria's loan. That means we have taken loan from Ria. Okay. So what to do here? By balance brought on, opening balance. It is a liability account, so the opening balance will be there in the credit side. 15,000 is the loan amount. Okay. And we have to pay interest on Ria's loan. Interest on Ria's loan we have calculated there. 500 rupees we have calculated. That 500 we have to write here. So the total amount 15,500, right? That is taken to the credit side and can write here to balance carry down. Sorry, here Ria's loan we have to, we cannot keep it as balance carry down because it is to be finally settled. Okay, so that will be written as to cash. If we have taken loan from partner, that loan account is to be prepared separately and the balance will be transferred to cash account or will be paid, need not be adjusted in their capital account. But let us see what will be the case in the, if we have given loan to any partner. If we have given loan to any partner. So here this is our asset account. We can write balance this on the debit side. 2,000 is the loan amount. Okay. And no other entries. So we will balance the account 2,000. Here what to do with the balance? Here if in adjustment, if it is separately given that the partner paid off the loan, if it is given like that, we will write here as by cash. If it is not settled by him, this amount we have to deduct from the money we have to pay to them. That means it will be deducted from that partner's capital account. So it can be transferred to the partner's capital. So Dia's capital, how much? 2,000 is the balance. Okay. So Dia's loan account also over. Now let us prepare their capital account. Capital account of Dia and Ria. Opening balance we have in the balance sheet, that can be transferred here by balance brought on 30,000 and 10,000. Okay. Then in the realization account we have an entry that regarding realization expense. Realization expense is met by Dia. So in Dia's capital, what can be written? By realization. Realization in Dia's capital 600 rupees. Okay. Now in balance sheet there was general reserve that is to be transferred to partners capital account in their old ratio. That means equal ratio 7,500 each. Okay. Then let us see the debit side. Debit side, first of all, what we can write? Dia's loan we have prepared. That balance is transferred to her capital account. So in Dia's capital we can write 2,000. To Dia's loan 2,000. Now realization stock is taken over by Ria. So in Ria's capital we will write realization and the amount 7,000. Then again realization account is there because there was loss. That loss we have to share in the capital account. That is to be adjusted to the debit side of the capital account of partners. So realization loss will write for both the partners 4,900 each. Okay. Now all the entries there is over. We can total the account. Both are having credit balance. So that will be taken to the debit side. So Ria 25,600 and for Dia 11,200. What can be written here? Is it to balance carry down? No. Because here they are not continuing the business, it is dissolving. So the amount will be settled, it will be paid to them. So we can write to cash. Okay. So 25,600 will be paid to Ria and 11,200 will be paid to Dia. Now let us prepare the cash account. That is the last account there in the dissolution of partnership. In cash account, we have opening balance in the balance sheet. Since it is an asset, it should be transferred to the debit side to balance brought down. Amount 25,000. Okay. Now, realization account we can write. Realization account here we have credit side of realization to cash is there. Sorry, by cash is there for asset realized 52,200. Okay, so that 52,200 we can write realization account. Okay, then in the credit side there is payment to creditors. We can write that here 24,900. Okay, then Ria's loan account we have prepared. That amount is to be paid. Ria's loan account is here. We have written 15,500. That amount is to be paid. So in the payment side we can write Ria's loan account 15,500. Then comes Ria's capital. Okay, Ria's capital and Dia's capital. Their capital account balance is to be paid. So we can write Ria's capital and Dia's capital. The capital account balance we obtained, that is to be written. Okay. So let us total the account 77,200 in the credit side and debit side also 77,200. So that is the end of the solution. So you can go through the solution once again and after that you can try to solve the same question once again. Then similar questions you can find from the reference book and try to solve. If there is any doubt, you can communicate that to me. Then thank you.